Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time. So if you'd like to watch it again, you can do so there, or you can just watch a piece of it again. And we'd love it if you also subscribe to our channel and click on the bell to get notified. The webinar handouts for today's webinar can be downloaded in the handouts tab, also in the GoToWebinar control panel. If you're having any problems locating or downloading them, please let me know in the questions tab and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar. And the second is a CFD guide, which basically describes all the specifications of the different products that we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box below the video. Please click show more and you'll be able to see them. For those of you who don't know, Trevor is very experienced, over 40 years, in fact, as a technical analyst and trader, and was former global head of technical analysis at Bloomberg. So, Trevor, over to you.
Okay, thanks very much, Dan, and welcome everybody. And let me just remind you, I love it when people ask questions and we become more interactive. We will, of course, cover the currencies, the cryptos, gold, silver, crude, and the major stock indices. But if there's anything that you want me to cover that you think I might not, please send Dan a message, or if anything at all, any commentary, not you don't understand something I'm saying, then just chirp up, please. It's a pleasure for me when I feel that people are, listening and questioning. Okay, so let us start with the dollar, and the first thing we're going to do is look at the relative rotation graph here of the the G10 currencies versus the dollar. We've got an interesting change in the picture here. We've got as many currencies on the left-hand side of the vertical to the right. That means anything on the right is outperforming the dollar, and anything on the left is underperforming the dollar. Most notably, we've got the Norwegian crown, the Australian dollar, furthest on the left, but not massively far on the left, so not strong underperformance there. But we've got the euro has switched down and has moved over into the left during last week. And then everything that's on the right, you can see the trajectory, except for the New Zealand dollar, is if you like, southwesterly. Now this north-south region, so west is weak, east is strong, north is with positive momentum, and south is without positive momentum. So the message with the Swiss franc here is that we're weakening, still outperforming, but weakening and losing momentum. I think I know where that is headed, don't you? And the Japanese yen and maybe even the pound too. So the message is here is that the outperformance of some of the currencies versus the US dollar has degraded enormously and is looking like the dollar strength is likely to resume versus the other currencies. Now, that's a pretty important message. So we're going to look at the Swiss franc and the pound and the euro and also the Australian dollar in some detail today. If there's anything there that you're disappointed that I am not going to cover, then now's the time to chirp up. Now, starting with the euro, the big one, if you like, I'd like to go to the weekly chart, and we've got a very dominant chart pattern here. What is it? High, higher high, lower high, potential head and shoulders pattern here. I call it potential head and shoulders because we've got the neckline, which is drawn from the left shoulder to the head, the low in between, head and the right shoulder, the low in between. And we tested it last week. We probed through it. It looked really like it was breaking. And, I really must say myself, I thought during the week that it was breaking. But by the end of the week, and this is the important thing on a big chart like this with weekly bars, by the end of the week, we had not broken. And so the neckline is not broken. I'll redraw that neckline a bit lower now with the benefit of hindsight, but we're trading right on the neckline. So what is likely to happen here? If we break the neckline, we want to see an emphatic break. So we want to see a weak, that's a W-E-A-K, W-E-E-K, a weak with big black candle finishing near the low and a big bodied candle to confirm this, and be patient because this is a big call. The minimum price objective from this classic chart pattern would be from the high to the neckline measured downwards, and that would take you to 111, where there is a lot of support in the euro. So, you know, this is not a thing that you want to rush into here. So let's wait, be patient, and bear in mind that statistically, when you get a pattern like this, a potential head and shoulders, they don't become head and shoulders. You know, a head and shoulders top is a rare animal. A big one like this is an extremely rare animal. So the fact that it hasn't completed means that still we must think of the euros as still more likely to hold than to fail. But we're watching this very closely, and within the next week or so, we will know the answer. On the daily chart, well, on Friday we had that big bounce, and this activity here was below the line, and we finished above the line again, but it's bumped into resistance immediately, so there is a strong resistance now. It really must hold here if we're going to avoid this major sell-off. The trigger is now clearer. A break of this low of 117.04, so a break of 117 would be very bad, and we're watching all this resistance here, but that extends up to 119. A move through 119, the pressure's off for this head and shoulders. So there we are. There's a study. Keep this right in the front of your mind, because this is a profound moment technically in the market. Pound has got a different pattern. There we are, British pound. So here, if I show you again the weekly chart on the pound, here we had two highs together and we had a low in between. We probed below it here, and then it rose above it again. It's trading above it. So we've got some very clear levels here also. So we've got a double top threat. 137, say, is a big round number, would be the breakdown point, but the clear breakdown point is this low here at 135.70. Then we've got some support lower down here, but it's pretty weak. The weekly MACD is negative. The daily is also turning negative. The RSI is drifting in it. It's quite a weak picture at this crucial point. So here is the very precise level to hold, which is 135.70, and there is some support around 138 here, which could help us and hold the market. The RSI is at 50, midpoint of its range, so it's not strong or weak. So just watch out. Again, it's a very big picture thing, potential double top in play, and all the things I said about the head and shoulders apply here too. Most likely it won't be a double top. Potential double tops mostly don't become double tops. Some of them do. We've got the trigger point, we know where it is, and then the implication of that will be the height from the two highs to the pullback low.
Trevor, can I just interrupt you for a second, please?
Of course.
Yeah. We've had a couple of people saying again that they can't hear, but not as many people as last time. If you can hear what Trevor and I are saying, please can you write a message in the comments to say that you can hear, because we're a little bit concerned that not everybody can hear. So again, please, if you can hear us, please let us know in the questions tab.
Okay, I'll leave that to you, Dan.
Sorry about that. Please continue.
Okay, that's okay. Now, in the RRG chart, we saw this Swiss franc here heading strongly southwest. That's still overperforming, but heading southwest, weakening on a relative to the US dollar. So let's have a look at that. And so weakening against the US dollar would be that this chart would be rising. That would be the dollar rising. So on Friday we had this fall in the dollar here, taking the pressure off this potentially really very important level, 92.40 up to this high here, dollar high here at 92.74. That area there, break of that could really indicate a big fall in the Canadian dollar, sorry, the Swiss franc, in the Swiss franc. But this is the context that we've got for it in the weekly chart. What we're toying with here is this triangle, symmetrical triangle. So we haven't got a clue really from the slopes of the support and the resistance line which way it's going to break out. But it's testing the upper side. That's the dollar upside on it, and so there is potential here for a big move to follow. This narrowing up pattern is coming towards an end. It's typically the time when the breakout occurs, and it is on balance more likely to be up than down. I do see that the MACD is negative here, but it's very close to zero, which is often means that it's just the MACD in its calculation correcting towards zero because of the sideways movements, not because it's particularly bearish, not because it's bearish. So watch out. We're at this here is a very important area. We're close to it. We were very close to it at the end of last week, and we could come back towards it. That's what the RRG is telling us. Then the other one I wanted to talk about was the Australian dollar, just to remind you where that is. That's over here. So with the Norwegian crown, the Australian dollar is furthest to the left. So the weakest against the US dollar. This, if you wanted to sell something against the dollar, this might be your currency of choice. So let's have a look at the chart, the absolute chart of it. So it's meeting. It's a very interesting thing because it's building a very narrow band of consolidation here in the context of this sell-off here, but having come down to and slowed up at this big area of consolidation from back in the middle of 2020, which I've got the circle in here. So it's come back towards that. That is a support area, dollar support area for it. So is there more on the downside for the Australian dollar or not? Well, the breakup point is very clear. We're lucky about that in the Australian dollar. So we've got support at 73 cents and resistance at 74 cents. So we're consolidating in there. So watch for the breakout of those. But the RRG is indicating the breakout is most likely to be the downside on the upside of this chart, that being weakness of the Australian dollar. So watch this side as the more likely, but there's no clue it's going to happen yet. Yes, the MACD is a bit bullish, but the RSI is really hovering around the middle there as we churn away sideways. But it's a very narrow range, so we're lucky to have a very clear breakout point. So anybody come up with any currencies before I move on to the cryptos?
No, sorry, Trevor. No, we can continue.
And what's the verdict on the sound?
I'm not 100% sure, but there's still quite a lot of attendees in, so there have been no complaints for that. So I think we can continue.
Okay, all right then. Because if anybody sort of can hear, then it must be a local problem.
Probably.
Yeah. Okay, so let's look at the RRG of the cryptos. So we've got here's the dollar. So they're all quite a lot to the right of the dollar. So they're outperforming the dollar, and they're screaming upwards. Ethereum furthest to the right. Litecoin now, having been the sort of the dog of the group, has now overtaken Bitcoin. And Bitcoin is now the dog of the group, if you can imagine that. Ethereum is still the best looking. So let's have a look at that on the charts. So let's do it in order. So we'll start with Ethereum here. So here's the big bounce. I mean, what a great move here as we broke out of this downtrend line here, powered ahead, and we've had some nice waves up. Everything's strong about this now. Note the ADX. The ADX is a 41. That's the measure of the strength of the trend. So the trend reading is 41. I can tell you as a spoiler, it's the highest one. It's got the strongest trend. And the trend is up, of course. The MACD is telling us that. And look at the weekly chart just to get the context here. Now, the great thing about this is there's very little resistance above. So this is it's very easy for this to go up and, you know, maybe get to its highs and beyond that. There's not a lot. We flipped in we went 2 bars up, 2 bars down. It was as brief as that. There was no consolidation at the top at all. This one fell back 61.8%. Just bear that also in mind when we look at Litecoin, which we're going to talk about now. The MACD is positive. The RSI is positive also on the weekly chart here. This is looking great. It's looking great. And what you look for is how difficult is it going to keep on going? Well, it does look as though it can keep on going. Let's look at Litecoin, which was lagging here, and it's powered up. It's got catching up to do, and that's what it's doing. So here it is. Here it fell much more than 61.8. So the bull case was absolutely damaged tremendously by that. The MACD on the weekly has not crossed yet. The RSI is very strong. So this potentially can catapult because it's got so much catching up to do. But notice that between here and up here is a long way, first of all, but also there's quite a lot of resistance here. And so it's not going to be so easy for it to go up in the way that Ethereum has got a clear shot. On the daily charts, I want just to show you that the ADX here is at 40, so not as good as 41, but that's almost as good. So we've got a strong uptrend in Litecoin as well. And then Bitcoin. Bitcoin, again, let's look at the weekly chart here. Now this one fell the least. It's consolidated, made its breakout, burst through the 4,000 resistance, and that was fantastic. The MACD has now crossed the RSI is going up, but look here, this is very worrying to me. From 50,000 upwards, we've got a big consolidation here, the sort of head and shoulders sort of pattern here. It didn't go into a V-shaped top, a spike top. It consolidated at the top. There's an awful lot of trading, an awful lot of people have still got longs up there, and they would be so delighted to be able to get out at break even here. So there's likely to be a lot of pressure in Bitcoin, and Bitcoin I think is going to lag and continue to lag the Ethereum, which I like best, and Litecoin as well. The ADX here is also 40, so they've all got good trend strength, but this one has got a lot of resistance just above it. Go for the one where the passage is easiest, the friction is lowest. But the pattern is constructive. It is good looking. It's going up. The MACD is positive. The RSI is hovering around the top. This is good too. But given the choice of the three, I would say that we've got a strong message that Ethereum will find it easier to keep going up, and Bitcoin is likely to have headwind coming soon from around 50,000 area, which is not that far away now. Going now to commodities and gold. So we had an amazing performance here, which left us this spike weekly candle here, 1680, these two lows here and this consolidation here, and then it got an electric shock and jumped out of that. And that was an amazing incident there, and that must have been very costly to an awful lot of people because it was so fast. Also at the weekend there, and it seems to at the conclusion, I don't know what if you've heard differently, was that this was a liquidity issue. It was like basically the people weren't there, and being a midnight on Sunday event, so it was kind of like a mistake. But often these mistakes, they occur in the direction that the market really wanted to go. It just the extent of the fall was very substantial. So here the plunge now we've come back to resistance at 1800 area here, which should make between 1800 and 1830, should slow up this advance anytime now. That this rally should lose its power. There is support at 1750, and then the spike low, which is at 1684. But this area here, I think, is support now too. So I think that this rally here is about to run out of steam because the resistance is quite strong, and I wouldn't be surprised to see this turn down again. Now let's look at gold and silver, because there's interesting behavior here. We'd had silver. This is gold outperforming silver. If it goes up, that's gold outperforming silver. We had this blip here, and which we talked about, but it seems to be over. So it's gold outperforming silver again. So let's have a look at the silver. And is there really any evidence of this? Well, you know, silver's going down here, and you know, you think of how impressive the bounce was in. It had its own spike silver, but look how much more impressive the bounce was in gold than in silver. Silver's hardly bounced; it's found little energy. You know, there isn't much resistance between here and 2450, but there isn't also much upside energy either in this market. So, you know, I really think that the gold-silver ratio it tells the story. Really, better off with gold than with silver. But is it better off to be in gold at all, really, versus the stock market, which we're going to come onto in a moment? But just at this moment, let's take another look at that gold S&P ratio, and that's a horror, isn't it? One is the big area here, and we're coming back, looks like, towards 1 again. Incredible that should be the case there. So just let me squeeze this up so you can see all that. Here's 1-to-1 ratio between gold and the S&P. This is gold underperforming the S&P. Looks like it's going to continue more. If you've got a limited amount of capital, no matter how bullish gold looks, it's better at the moment to be in the S&P. Whether that's a permanent state, I don't know, but that's the story there. So before we go to the stock market, let's look at Brent crude oil, because it's really been very much affected by the dollar as well. So this hesitation in the dollar has caused a big hesitation in the crude oil at a very important level. I just want to bring you the context in for that. So here we were testing the $75 level, looking like heading for this high here, which would have been, you know, indicated a big move up into the above $100, but we've turned down hard from that. We've turned down very hard from that, and we've broken this most recent pattern of rising lows in the chart. We had a warning on the weekly chart, which we noticed here, of the bearish divergence, high, higher high, high, lower high in the RSI, and the same in the MACD too. So this chart is actually bearish. It's a bearish chart. We've got a lot of resistance above us here, which I've got the cigar. We've got some support around these two lows here, 67.60 area here at this support level here off on the left here. So we've got the resistance, we've got support, we're being buffeted between the two, but the trends have all turned decidedly down here. The RSI is going down, the MACD is going down, more likely that the support levels are going to be tested. And this would be likely if the dollar strength reasserts, which it looks as though it might do. Right, moving on to the stock indices here, and let's start with the S&P, which is the strongest of the lot, but it's getting, you know, I don't know, a little bit lonely in that role there. So the, you know, just talking about the big picture here, you know, the retail investors have been right about the market. They've been very, very bullish. We've got sentiment indicators. There's a couple of good indicators of that. The American Institute of Independent Investors, I think it's called, that has a survey. And they have many tens of thousands of members. They're retail investment clubs and all this kind of thing. Now their sentiment has been very, very bullish. The banks and that have not been bullish. They have been reluctant participants. They've been dragged into this, because they have to match the index, but they've not been ahead of the curve at all. So the funds the active funds have tended to underperform the market itself. They've done well, but not as well as if you just bought the S&P ETF or something like, as many retail investors have done, and it's gone up. We've seen more and more sort of indicators which say this has never been like this before, until of course it is. And these breadth indicators, which technical analysts have thought it's very bearish, because whenever it gets this number, the market turns down, but they haven't. And so we just get to a higher number than we've ever been to before, and it's, so that's one after the other that has happened. The professional analysts, so the bank analysts and the sell side analysts, are now turning really decidedly bullish, and they're very late doing this, and this is a pretty bad sign, when these people turn bullish after such a long time of the market going up and them not being bullish. So actually, analysts, as monitored on Bloomberg, 60% have buys or are overweight in securities, and this is as high as it's been as a ratio of bullishness since 2002. They're overwhelmingly are obviously bullish because they're salesmen. They're trying to sell ideas and stocks to people, so they're always biased towards bullish even when the market's going down. But this is a very high reading in it, so that's a warning. These analysts have a poor track record of of being rather consistently very bullish at the top and very bearish at the bottom. And so it's interesting that the smart people, that is the retail investors, have become a bit more cautionary, so they might be a bit ahead of the curve. But this is a very strong chart pattern. I mean, what can you say about this? This is the weekly chart. It's been monumental since that 2000 low. But look at that. What price was that? 2,300. What price are we at now? 4,600. We have doubled since the pandemic low. Would you have ever said, when the pandemic and the fear of the pandemic and the fear of the economy, the future of the economy, with the whole world locking down and grinding to a halt, that here we are a year later or year and a half later, we are double? It's astounding. It's astounding. And there's no end to it in sight on this graph here. The daily chart is going up. The indicators are going up. The ADX is my worry here. It's only 14. That's the strength of the trend. You'd think this would be at 50 or 60 really here, but it's because it's a relative reading. It's stating that the trend is not strong. But by my reckoning, this is a very strong trend. 14 though, and rising. This is, I think, the more important thing is the fact that it's rising. This trend is weak, if you like, according to this measurement, but it's rising, getting stronger, and it definitely is getting stronger, and all the technicals are bullish. Let's go to the Tech 100, and here we've got a bull market also, of course, here, and the MACD and the RSI, of course, very, very bullish here. The RSI is pointing up. The MACD is actually pointing down, but I think that's reflecting more of a flatness. Now here, the ADX is low, is at 12 and falling. That's the thing. This isn't making new highs like the S&P is. So that leadership of the technology stocks, as we've noted here, has deteriorated. So you have to be much more selective about your tech stock purchases. It's the move up is becoming more broadly based, moving into old industry and heavy industrial securities, not just driven by technology. Technology is nothing wrong with this chart, but it's not as bullish as the S&P, and it was clearly the Tech 100 was more bullish. Now let's move outside the US, and let's look now at the FTSE, at the UK 100. And here we I must show you the weekly here, because here we've got a very worrying picture here for a bull market. It has ground high. It's been, I think, pulled back by the big wind of bullishness, but it's got resistance at 7,200, and that's from here. I should draw in a big cigar in here. And just to remind you, there is where it is. That is a massive area of resistance, and we're right at it now. It's going to be very hard for the FTSE to make further upside progress. Already the MACD this one is not positive, and the RSI is looking pretty good, but it's not positive on the weekly chart. So here we are at that level. I do foresee trouble ahead here. It has underperformed, it's lagged, and I think it will, at very best, even if the rest of the world goes up, it will just move sideways. So this is my least favorite stock index. Looking at the DE30 now, and again, the weekly chart here, think of the FTSE. The FTSE has got all this trading above it here. Now here we're very clearly above all the support. This is moving up nicely. Here it's powering ahead pretty well. The MACD is actually close to crossing up again, I'm pleased to say, after a little bit of a hesitation after this flatness. But I think we're now putting that behind us, and this has now become support. This trading from mid-June all through July becomes support as we clear it, and today's pullback and then rally, I think, gap down and then rally, I think was an opportunity. In fact, the ADX here is flat and 16. The RSI is bullish. The MACD is bullish. I like this one a lot, and so I thought hopefully my message there is clear. We've broken up from consolidation. Looks good. Should start to gain strength here, and I think that. This one will take on a lead as an alternative to the S&P. Watch out on the Tech 100, which is is losing its shine as a star and starting to underperform the US 500 itself, and the FTSE. I find it hard to believe that it can go up at all. There's just so much resistance above. All right, Dan, did we have any questions?
No questions today, Trevor. We seem to have a little bit of a problem with the audio, so we're not 100% sure how many people heard and how many people didn't. So hopefully people will be able to catch up on YouTube. So I think we can finish up for the day. Did you have anything else to add? And I'll sign off.
Yeah, I think I did the conclusion there. I'm sorry about those of you that didn't hear, but thanks for hanging on anyway. And as Dan said, join us for the YouTube, which will be there soon. Will be posted soon, a couple of hours, I think, is normal.
Yeah.
Yeah. Thanks very much, Dan. Very much indeed.
Yeah, no worries. Like Trevor said, please go over to YouTube, and if you do go over there, don't forget to subscribe to our channel and click on the bell to get notified. It really helps us, and you'll also get notified whenever we release one of these videos. So anything to add, Trevor, or shall we call it a day?
Thing about watch that head and shoulders, the big head and shoulders on the euro. This could be a lesson in technical analysis, how it resolves itself and how you control your analysis enthusiasm at the neckline as it's tested. It probed, it's back above it. Now will it ease back and make the break properly, or is it going to hold and the dollar will keep going up? We shall see, and we'll see soon as well. All right, thanks very much, Dan. Thanks everybody for joining us, and may the trend be with you.
Cheers, Trevor. Bye-bye, everyone.
Bye-bye.